What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we continue to see the indices pushing higher, and we still see some weakness in the Dow Jones. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY going up 0.2%, and we are back above that 427 level. Remember, our price target was 427, and above that we're looking for 430. And we're now breaking and closing over 427. So it's still looking very likely that we're going to see SPY pushing towards 430. Remember, all of these price targets could easily trigger a pullback and a correction, but we are coming off of a nice little pullback correction during quad witching, so don't just assume that we have to see another pullback of that magnitude in the very near future. That's recency bias, and we're coming off of a very strong support level in a very strong bull market. So as long as we're above SPY 427, our price target above is going to be 430. Now we could still see a minor pullback back into about 425 or the gap close at 424, so be on the lookout for that. But I would expect SPY to find support somewhere above this 20 simple moving average, which is now going to be somewhere around $423. So remember, we have the full bull trend and we have the bullish price action, and we want to remain a bull in a bull market. There's no reason to try to short the market just because it's going higher. And remember that in bull markets, we're going to constantly see new all-time highs. So just get used to seeing new all-time highs in bull markets and don't bother trying to call a top in a bull market. It doesn't matter what you think about valuations or the fundamentals of this market. As long as the price action is going higher and the trend is still bullish, you want to remain bullish. It's okay to get defensive and go to cash, but it's not worth trying to short a bull market unless you're absolutely one of the best short sellers in the world. So your critical support now is 424 gap close and this 20 simple moving average, which is going to be right around $423. If we do start closing below that 20 simple moving average, now we can definitely get a lot more defensive because it's always possible the market's rolling over if we see that price action. But until we see that price action, we have to remain bullish with the price target above at 430. On the NASDAQ 100 triple Qs, we also saw a very bullish day today, going up 1.22%. We did break and close over that price target at 353, which is a very bullish price action breakout. We still would like to see some follow through, but as you can tell from this chart, it is extremely bullish. The price action is well above a positive sloping 5 EMA, and all of these moving averages are still very stacked to the bull side. There's no way you can look at this chart and not be bullish. This is one of the most bullish looking charts you're ever going to see. All of these moving averages have really nice separation, and they're all positively sloping and in full trend mode. This is an extremely bullish looking chart. The next price target above 353 is going to be all the way up here in the 360s, but don't look too far ahead because we still need to get another price action close above 353. There's always the possibility we see a little bit of short covering that causes us to exceed our price target just before the pullback. So in the event of a pullback, we're looking for possible support at 346 and 342. As you can tell, that 20 simple moving average is now right in that 342 level, so that's going to be your most critical support level. From today's close back to 342 is about a little more than a 3% pullback, so it's not that big of a deal, but it's still a reasonable pullback that we could expect to see. We did see the market going up on increasing volume on the triple Qs, and again, some of that still could be short covering. So the price target above is going to be about 361, but I really would like to see another price action close back over 353 going into tomorrow. But again, this is a bullish chart, so you want to remain bullish, and if you're getting scared at these all-time highs, just go to cash and wait for the next best buying opportunity. There's always going to be a great buying opportunity right around the corner as long as you're patient. On the Dow Jones, we did see some selling today, going down 0.48% and closing just below that 20 simple moving average. If you look at the Dow Jones index, we're actually above the 20 simple moving average, so we're still dealing with that dividend payout. But overall, the price action is still relatively bullish, and we did close the gap below right around 342. We still have support at 341.7, and we still have a gap just above the 50 EMA at 340. So those will be your critical support levels, and if we break back below the 50 EMA, it will be more likely that this was just a dead cat bounce, and we still are coming down to close the gap down here. The gap down here is right around 331.7, but we would want to see a close below 340 before we assume that gap's going to get filled. To the upside, we'll have resistance around 344.5, 348, and above that, we're looking for a retest of the all-time high around 350. Do note the Dow Jones does not have a bullish trend, so watch the price action at these critical levels very closely. On the Russell 2000, we dropped 0.79% today and closed right on top of that support level at 230. You could see the Russell 2000 is trying to get back into a bull trend. We just need that 13 EMA to cross back over that 20 simple moving average. The price action is above all the moving averages, and the next resistance levels are above at 233 and 234. Above 234, we'll be looking for a breakout to new all-time highs with a price target of 237. The critical downside support at the 20 simple moving average is right around 229, and below that we could come back down to the 50 EMA around 226. On the Arkk ETF, we had a huge gap up, and we had a very bullish day going up 3.78%. Arkk has a gap now that won't be filled until we get back down to about 126.4, and we do have resistance just above right around 130.5. Above that resistance level, we still have resistance at 135, with downside support around 128, the gap close around 126, and the support trend line right around 123. The 20 simple moving average is about to cross back over the 50 EMA, and that support level is down around 117. So as soon as tomorrow, Arkk is going to be in a full bull trend, and we've already known that the price action was bullish along the way. So we'll have the bullish price action with the confirmation of the bullish trend, which does mean that Arkk is very likely going to see a summer bull rally. So look for these tech sectors to do very well going through the summer, and that's why we're seeing so much strength in Arkk and the triple Qs. On the VIX, we were up only 0.9% today, and we do see the VIX continuing to close below 16. Remember, VIX is a measure of fear, and we still see low fear, which does tell us we are likely to continue to go to all-time highs. But do watch the VIX closely, because if it does start to spike back over 18 and gets back over 20, that could mean that we are going through a correction as we hit these price targets. But right now, the VIX is telling us to expect higher prices, and we still see a bull market. On the US dollar, we're still consolidating just above the 5 EMA, and we're very close to having a full bull trend. So watch the dollar closely if you're trading gold and silver, because a strong dollar will weaken gold and silver. On gold, we're still going sideways just above that support level at 1776, and below that we'll have support at 1761. Below 1761 support, we could be going back down into the 1680s, with the upside resistance and price targets at the 50 EMA at 1821. On silver, we're back over the 5 EMA for 3 days in a row, and we see silver continuing to bounce off that support level right around 25.8. The next price target is above at 26.5 and the 50 EMA at 26.8. Downside support is 25.8, and below that we'll be looking for support at 25.1. On Bitcoin, we're currently down about 1%, but we are seeing Bitcoin starting to look like it wants to break out. Again, we got that double bottom look that I talked about in the weekend episode, where I told you Bitcoin could not break below $30,000, and that was actually making me more bullish on Bitcoin. Remember that price action is king over everything else, and price action not being able to break below a key support level is actually a bullish indication. So we did see buyers coming in off that level, and we did see Bitcoin testing that resistance level right around 35,000. So right now we need to see Bitcoin getting back over the 20 simple moving average. So a break over 35,000 and then a break over 36,000 should get us to be able to test our resistance level at 39,000. Now this resistance level is very important because that's also where the 50 EMA is. So if Bitcoin can get back over the 50 EMA, that will be the first time that Bitcoin's back over the 50 EMA since the crash. So that will be very bullish price action, and that could start Bitcoin back into a bull trend. So watch the $35,000 and the $39,000 resistance levels very closely. Bitcoin is bullish above 30,000, but if we do break below 30,000, look for price action to go back to 27,000 support or back to the $23,000 support. On Amazon, we were up 1.25% after bouncing off of that support level at 3,400. We found resistance right at the 5 EMA, and we still have resistance above at 3,500 and 3,552. So Amazon is looking bullish on this bounce, but if we do start to see more selling, look for support at 3,430, 3,400, and that 20 simple moving average at 3,360. On Tesla, we were up 2.5% today, and we still see Tesla struggling to break that resistance level at 692. If we can break out of 692, we could go to 714.5, and above that, we could be running up to the 760s. However, if Tesla can't break above 692, it's still possible we come back down and close this gap at 659. This gap close is something I would pay close attention to because this could be a strong support level in the next best buying opportunity. Remember, Tesla is breaking out and it backtested the breakout as support, and now it's bouncing again. So overall, this chart is bullish even though we don't have that 20 simple moving average back over the 50 EMA. So be cautious of this gap at 659, and below that we would have support right around 639. On Apple stock, we were up 1.25% today, and Apple did get to our price target at 135. That's where Apple found resistance, and we need to break over that level to get to the next price target at 137. Our downside support level is going to be right around 133 and about 131.8. These are strong support levels, and Apple is in a full bull trend, so look for those levels to hold up as support before Apple continues to push higher. Above 137, we're looking for price targets back in the 140s, and Apple is still looking like it wants to push towards those levels. On the financial sector, we were down 0.73% today, and we see the financial sector closing back over the 50 EMA for the second day in a row. So there's still some damage repair on the chart, but it is looking like the price action is holding over the 50 EMA for now. If the financials break back down, watch out below because it could be going into a bear market, and we'll want to know if the financial sector is going into a bear market. On the industrial sector, we dropped a little over 0.5% and the price action is back below the 50 EMA. This is not what you want to see if you're bullish on the S&P 500 because you want to see the financials and the industrials joining the bullish rally. So look for the industrials to try to get back over the 50 EMA, or this was all just a dead cat bounce and it's going much lower. On the healthcare sector, we were up 0.15% today and the healthcare sector continues to look bullish. The price action's over the 5 EMA and we still have the full bull trend. On the energy sector, we dropped 3.38% today, and we see the energy sector coming back down to the 50 EMA. Look for that level to hold up as support because if it doesn't, look out below and we could be going much lower. So jumping back over to the S&P 500, you can definitely see a lot of strength in the tech sector and the healthcare sector. The financials, the industrials, and the energy sector are not looking so hot, so we'll need to continue to watch those very closely. Overall, we're reaching critical price targets as we see some weakness in the financials and the industrials. So even though the charts and the indices are very bullish, we do want to understand that we want to see the bullish rally across the board. So we still need to see the Dow Jones and the Russell 2000 joining in on the party if we're still expecting to see a strong summer bull rally. Overall, it's still possible we see a summer bull rally in the tech sector and we see weakness in some of those other sectors. So watch the price action very closely in the sectors and pay very close attention to my critical price targets because it's always possible we see a pullback or a correction after these levels. Also, don't forget that I did launch my trade alert service that only trades TQQQ. The name of the service is Bank Trade Alerts, and it sends you buy and sell alerts via email and text message. I'm currently running a 50% off promo for your first month, and you can find out all of the details in the description below. Also, don't forget about the Stocks Channel Discord where I do intraday updates and analysis to always help you navigate this market. You can find out all of the details below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.